the start of the video. So apologies if I sound like I'm delaying for the first 10-15 seconds before we crack on. You'll see that the headline of this video is PGMs roar on and gold and silver continue to shine. Of course, we will have a look at the markets in this midweek macro for Wednesday, the 15th of October. I'm going to be referencing quite a few posts as well. Again, they will be placed in the post that comes with this video. So for any references that I make, come back and have a look at the post when it is released on Substack. If we have a quick look at gold and a quick look at silver, let's start there because that's what most people are talking about. I should point out it's just gone 3 o'clock Eastern on Wednesday, the 15th of October. Gold is at around $4,200, up 4.5% on the week. Silver has just crossed above $53. I know some people have had some feedback on videos and said, Rob, when you are looking at numbers, your numbers might be a bit different from what we see elsewhere. I do use the TradingView app and the TradingView website for my numbers. So I appreciate that different places are going to have slight different numbers. But just for reference, the numbers that you do hear from me are from the TradingView website. As mentioned, silver is around $53. If we look at the weekly charts, it is 9 weeks in a row of green candles, and that is for gold and silver. We've explained the fundamentals so many times before. Just a quick reminder, ultimately with gold, if your fiat currency is decreasing in value or it's being devalued, and therefore the asset prices this time gold, it is going to go up. It's just one of those correlations. Yes, there is currency printing. Also going to be looking at the Federal Reserve, very likely to cut rates come the 28th, 29th of October, which just adds fuel to the fire. Central bank buy-in as well. Again, very simple things there for gold. In terms of silver, the dynamics, it's becoming more of a monetary metal. Again, it's got a lot of industrial uses nowadays. The key thing I always point out with silver is in the physical market, there is a silver deficit. I think the Silver Institute had it at about 117 million ounces in 2025. It also looks like that is unlikely to improve moving forward. So economics 101 would suggest silver, again, very, very undervalued. I don't give financial advice. It's not something that we do on this channel, but I will say the same thing again, which is if you are looking to start a physical position in gold or silver, or you're looking to add to your physical position, then dollar cost averaging in is probably a smart way to do it. Even at $4,200 gold, even at $53 silver, again, if you're looking to accrue physical, dollar cost averaging in is probably not a bad thing to do. If you're looking to try and profit from the markets via trading, you could do things like short SLV and do those sorts of things. You could also look to just go long on the CFDs, absolutely. I personally wouldn't be looking to do that right now, because if we are in the middle squeeze, it doesn't really matter if you're overbought or not. It's going to continue to go onwards and upwards. I refer back to the mid-month macro that Chris Steadley from Live Commodity Corner and I done this morning. That went out. We have both expressed caution in the gold and silver markets. Yes, you know my thoughts. You know that I believe triple-digit silver is inevitable. You know that I believe that 5-digit gold, i.e. 10,000 and above, you know that I believe that's going to happen as well. In fact, I also wrote over the weekend, I wrote and released on Tuesday, yesterday, an article that shows that it's mathematically possible for silver to be $17,000 an ounce. That's $17,000 an ounce. I'm not saying that is going to happen, but it is certainly a possibility. The mathematics show that it is a possibility. Again, I'll link back to that in the post that comes with this video. So that's where we are in gold and silver at the moment. Again, physical bullion, then dollar cost averaging. If you are looking to trade short SLV, whatever it is, I don't do that, but I would say proceed with caution. And there's a bit more room to run before we cool off. I would expect these markets to cool off at some point. I mentioned, of course, in the headline PGMs. So let's look at platinum. Let's look at palladium. Again, platinum, we saw a red candle last week, ever so slightly down on the week, but it's back to its best, up $67 at the time of recording, 4.2% up on the week. It is at $1,657. Again, platinum's got a lot of room to run. Steve Penny, aka the silver chartist, his target on platinum is $15,000. Again, there's a lot of AI involved in terms of demand. There's a lot of things to do with catalytic converters, for example, hybrid cars, regular engines, and so forth. Of course, platinum, you have jewelry demand as well. Also, platinum is incredibly rare. With palladium, you don't necessarily have the jewelry demand with palladium, but looking at that palladium chart, last week it was a barnstormer, up 12.28% on the week last week, and at the moment it is up another 8.3%. It's $117 up on the week. It is trading at around $1,535. Again, what I would say with platinum and palladium, if you've been listening to the channel since April, you would know that I said that watch out for these things because they have the ability to go a lot higher, and they have. If you're looking to, again, start a physical position, then absolutely be my guest. You're more than welcome to do so. I think there's a lot of room to run in platinum and a lot of room to run in palladium. As with gold and silver, they could pull back. Absolutely. They could pull back. I'm not saying that they will, but they could. These things do not just go up in a linear fashion. If you can get your hands on some physical palladium, fair play. It is quite difficult to come by. I don't know of any bullion dealers in the UK that I'm aware of that have it in stock at the moment. Platinum's a bit easier to purchase. Again, even at $1,657, it's still a good buy in my opinion. And again, if you're looking to short these markets with whatever mechanisms are available, I certainly wouldn't be looking to do that at the moment. I wouldn't be looking to go long either. Again, if you're looking to go into the physical aspect of these markets, they do have a lot of room to run. What I should say on platinum and palladium as well is that it is predominantly supplied by South Africa. South Africa is far from a perfect country. There are a lot of challenges in South Africa at the moment. I think from a platinum point of view, 70% is mined in South Africa, the other 10% coming from Russia. Therefore, 80% of the world's supply of platinum comes from not unfriendly jurisdictions, because that's not fair, but jurisdictions that have got their own challenges. South Africa have got their own internal challenges, and the Russian economy and so forth. Well, if you believe what you read in the Western media, then the Russian economy is on its arse. Very unlikely. I don't have boots on the ground in Russia, but the point being, if you're going to continue to sanction Russia, then yes, that's going to work against you, I think, in the long run. One market, just to quickly touch upon before we go into the major indices, is the copper market. And again, I look at per pound, so this is US dollars per pound. At the moment, it's $5.02. If you look at the weekly chart, and we do this in the commodity wrap that's out every Friday, we can see now that it seems to be the $5 per pound mark is a bit of a challenge. It seems that there are probably some dynamics at play where if $5 is clearly broken, then it could just be more upside. So to me, it looks like there could be some suppression behind the scenes with regards to copper. So keep an eye out for that $5 mark. Again, that's per pound in US dollars. I should point out briefly WTI as well. And again, Chris Steadley and I looked at this morning. It's at 58.51 at the moment, and oil is very opportunistic, I think. There are a lot of opportunities in oil. Yes, it has the ability to go much further lower, OPEC productions and so forth. There's a lot of things to do with tier one land, tier two land, a lot of geopolitics at play in oil, of course. Gold is normally a good leading indicator of oil. So when gold is rip roaring, then at some point, oil will start to rip roar as well. And at $58.50, again, there could be quite a lot of downside involved. However, there is a lot of potential upside. I've said before on this channel that I think that triple digit oil will happen. I couldn't put a time frame on it. But again, if you are of the belief that the dollar or the DXY so forth is in a secular bear market, as per Luke Groman, then things priced in US dollars are likely to go in the opposite direction, i.e. up. Keep your eyes out on oil. I highly recommend you follow Josh Young of Bison Insights as well, previous podcast guest. I'll link to that episode in the post as well. Quick look at the major indices. S&P 500 at 6,670, ever so slightly up on the week. Nasdaq at 24,730, again ever so slightly up on the week. Dow Jones 775 points up on the week. It's around 46,250. Now, the reason I mention the major indices, I wrote in the weekly wrap, the market wrap, which comes out every Sunday. I wrote that the red candles last week and Trump's comments on Chinese tariffs could send the markets into a downward spiral. That hasn't materialized. Therefore, I would imagine, as per the thesis that I have, that these markets are going to go onwards and upwards moving forwards. Again, let's go back to the dollar itself and the dollar index. If you believe that that's going to get weaker, things priced in the US dollar are going to increase. Therefore, we're seeing this in the stock markets as well. I believe that's going to happen for 12 to 18 months. And the reason I bring that up is that if you believe the same thing, then that might help to shape your thesis on commodities. So if you think that with the stock market continuing to go up and you know why it's going up, then that could have an impact on what you think about where copper should go, for example. I.e., if most people look at the stock markets and they look at the green candles and go, oh, these are doing well, people will assume, rightly or wrongly, that that is a sign of economic strength and therefore things are going well. Therefore, people then might look at, again, for example, things like copper, things like oil, and go, it's time to get bullish on this. However, if you think that the stock markets have got a bit of room to run, but ultimately there's going to be a quite a significant pullback or depression-like thing that happened similar to 1929, then you might decide you want to load up on cash to take advantage of that situation. I'm not saying that either is right or wrong, but what I'm finding, and I see this online, I see this with my own friends as well, is that a lot of people like to keep talking about their situations and scenarios and get stuck in this analysis paralysis and therefore then have the inability to make a decision. Ultimately, if you are confused or you're not sure about what's going on, then I would say subscribe to Contrarian Capitalist. There's a lot of people out there with a lot of information. My point being that take some time to sit down and write about what you think is going to happen, why you think that's going to happen, and that might help to shape your overall thesis. There's no right or wrong. I said to someone on Substack the other day, even a broken clock is correct twice a day. Unless it's digital, then it's once a day. The point being that you have to have your own theory as well. My theory, and I write this in the commodity wrap every Friday, is that for the next 12 to 18 months, I think going to continue to go onwards and upwards. Yeah, there might be a bit of dip along the way. That's fine. I don't have a price target. I'm not of the David Hunter school where I have targets of 7,000, 8,000. But I think with having a healthy looking stock market, then people like that. Most people that don't pay attention to the markets like that. It's going to go onwards and upwards. I think again the Federal Reserve could cut at the end of October. It's more than likely they're going to do that, and therefore that could just add fuel to the fire. Not just in the stock markets, of course, but also gold, silver, and the PGMs. They're my thoughts. That's my theory, and that's what I base my investment decisions on. Haven't even looked at the miners yet. Miners is something I always say to people, have a look at Don Direct. He'll be back on the show in January. I know that he does some incredible work with what's going on there. He's always said that his exits in the mining stocks, at least, are when gold and silver get to a certain level. Of course, we'll touch base again in January of next year. I don't mention mining stocks too often. My portfolio is small. All I know is that if you are in the mining space as well, whether it be gold, whether it be silver, PGMs, even uranium, you are probably looking at your portfolio and you're probably quite happy with everything that's going on at the moment. I should say Jesse Day from Commodity Culture. He was on the podcast recently. I asked him about his exit strategies. Again, work on a strategy that works for you at the end of the day. People in the mining sector, people that have exposure to mining stocks, a lot of them will say, at least when you 2x or 3x, whatever it is, at least take your initial capital off the board and then you can sit in cash or you can redeploy to other stocks. Again, that isn't a financial piece of advice. That isn't a financial recommendation. What I am saying to you is if you're not sure how to play that, take some time to think about it. These things aren't going to go away anytime soon. We're still at the very early stages in PGMs, gold, silver, and so forth. Oil, again, is looking very bearish. I like that from a contrarian point of view. Use this time not to suffer from FOMO. Don't suffer from the fear of missing out. Think about your strategy. Think about your plan. Also, think about your exit strategy as well. And again, Steve Penny and I spoke about this a few weeks ago. I am writing a piece at the moment. It will be out in November about bonds. Again, bonds very unloved at the moment and not a good investment in my opinion. But there will be an opportunity maybe in 5 or 6 years' time where bonds will be the best thing to go for. So again, I'm thinking a step ahead of the game. I aim to write about that. All I can do is share my thoughts with yourself. And again, as I said, none of this is advice. I'm hoping that whenever you watch these videos or whenever you read the content provided by the Contrarian Capitalist, if that helps to shape you to become a better investor or helps you to shape your life by the decisions you make as a result of watching these videos and reading this, then really I'm here to serve you. I'm here to help you as best as possible. Looking at various bits of housekeeping, so looking at various articles and things that are going to be out and about. Of course, there'll be a post that comes with this video. As mentioned earlier, Chris Steadley from LiveScore Commodity Corner and I recorded the mid-month macro earlier on today. That is already out. I'll link to that in this post as well. The podcast with Jesse Day is available to paid subscribers and founding members. That'll be out to the general public tomorrow. I'm also doing a post with Uranium Investor. He's asked the questions. I'm giving the answers. I am actually going to record that after this, and that Q&A will be out tomorrow on Thursday, the 16th of October. The commodity wrap will be with you on Friday as per usual. The market wrap on Sunday as per usual. Also tomorrow morning, I am recording with London Paul of the Sirius Report. That will be out to paid subscribers tomorrow as and when that recording has been completed and edited. If necessary, that will be out to all subscribers at some point next week. Also, the podcast with Daniela Cambone is live. That came out on Monday as well. I should say before we sign off, big thanks to the sponsor of this video, Adam Fired. Get your plan B in place today. Adam's a published author, regular media commentator. He's been on this show before. I've been on his podcast. Got over 800 million social media views on Quora and beyond. He helps people that are looking for a plan B when it comes to their investments. He operates worldwide. I'd highly recommend you pick up the phone and have a chat with him. You can email him at hello@adamfired.com. His WhatsApp number is going to be in the post that comes with this, or you can head to his website, adamfired.com. When you do speak to him, I believe he offers some form of free consultation, a get to know you type thing, know your customer. Please mention that you come from the Contrarian Capitalist. He will look after you. Adam is a very good guy, very knowledgeable and very international. So again, head over to adamfired.com and thank you to Adam for sponsoring this video. Always, I should say, it will be an honor for me to, or please allow me to serve you at a higher level. If you're watching this and you're not even in if you're not even a free subscriber to the Contrarian Capitalist, then please do become a free subscriber, contrariancapitalist.substack.com. And you can also become a paid subscriber. A lot of people are becoming paid subscribers recently, so thank you to all paid subscribers and founding members. In effect, what you get for being a paid subscriber, you get early access to all of the expert interview podcasts. You have access to the commodity wrap every Friday, the market wrap every Sunday, the mid-month macro, and the end-of-month macro with Chris Steadley of Live Sport Commodity Corner. You have access to all of them. And of course, when we get to the yearly wraps on the markets, then you will have exclusive access to them as well. It's $11 a month if you just go for the monthly plan, I should say. If you go on an annual plan, it works out at about $9.20 a month. Exceptional value for what you're getting. So do go beyond the paywall. Please do allow me to serve you at a higher level. Again, I'll put a button to do that in this post, but you can also head to contrariancapitalist.substack.com and become a paid subscriber. You can also become a founding member. That is a one-off lifetime investment. So therefore, you pay X amount and that is done for life. I plan on running this channel for a very, very long time. My aim is to help as many people as I can to get out of this financial tyranny. This is why we say protect your wealth, defend your freedom, and outsmart the system. So again, please do allow me to serve you at a higher level by becoming a paid subscriber, contrariancapitalist.substack.com. Again, I'll be back with the post that comes with this in a bit. I'll link to all the other posts that I've mentioned. Have a fantastic week, and thank you in advance for becoming a free subscriber, for becoming a paid subscriber, and of course, becoming a founding member. Take care. Have a good afternoon.